Welcome back to Squawk Box. The holidays have helped Amazon stock, but some of the shipping stocks haven't fared so well. Joining us right now, I should say shopping stocks and shipping stocks. The shipping sector after the holiday binge. Don Broughton is the managing partner at Broughton Capital. Good morning to you.
Good morning, Andrew. How are you?
This is the first holiday that Amazon has not just made it through, but made it through with flying colors without the help of Federal Express. What does that say about the future of the shipping industry?
Well, it says a number of things. One of the things I would note is that FedEx didn't make that decision lightly to fire Amazon as a customer. But we can get into that a little bit more later if you'd like. What's also very interesting is that while Amazon's out there making these self-aggrandizing statements about the record volumes, a lot of the malls were lighter in volume than you would expect. And let's note that for the first time in, 5-6+ years, we had no announcements by UPS, the post office, or FedEx, for that matter, that they had service issues. Now, they're helped by the milder weather, but that said, they had fewer days to get everything delivered, and yet we still had no announcements.
And therefore, the takeaway is?
Well, the takeaway is if we look at the broader picture, we put out our Broughton retail sales predictor, based upon a number of factors. Inbound container volume. You look at the West Coast, the Long Beach, LA container port. It's more than a third of the import containers into the United States. The things we're selling, whether it be through retail or e-tail, it was down 11 and 12% in the months of October and November. So there's just fewer goods in the pipeline to be sold. That's a bearish signal. It's possible, to have a marketplace in which you have Amazon doing extraordinarily well and other retailers hurting lower in volume. I'm sure, Andrew, you saw yesterday MasterCard was out with its stat that the sales at department stores were down 1.8%.
Right.
They're down, but isn't it going just towards e-commerce? Isn't that where the shift is happening, Don?
Well, that's the belief, and that's the supposition. However, I just think that there's more at work here than just e-tail wins, brick and mortar retail loses. It's possible that Amazon outdistanced the competitors, while many others in total lost. That the consumer spending was less aggressive, less promising than what everyone is assuming it to be.
Hey, Don, I keep going round and round with this. Do you think that FedEx made the right decision by parting ways with Amazon?
Oh, absolutely, absolutely. I mean, let's face it. Fred Smith is the quintessential American entrepreneur. They didn't lightly make the decision to fire $1 billion a year customer. One, they weren't even making any margin on that business, and two, if you look at what's happening here. Amazon's entrance into the market, first of all, has two basic things we have to analyze. One of them is who's it going to hurt the most? It's going to hurt the highest cost provider with the worst service first. That would be the post office. Then it's going to hurt UPS. And so the first thing that FedEx has got to sit there and strategically decide is, well, you know what, it's going to hurt the post office first, then it's going to hurt UPS long before it hurts us as Amazon tries to grow market share in that space. So, should I let them hurt my two competitors? Well, okay, if I must. One. Two, the other thing that's at work here is that they've formed partnerships. Look at the partnerships they formed with Walmart, which is still 5 times bigger than Amazon. Partnerships they've formed with Walgreens and others.
Though.
Yeah. I'm sorry?
Not online. They're not 5 times bigger online shipping, are they?
Well, no, they're not. But they are a behemoth in the retail space that is looking to ever expand their online, and they're expanding their online. Amazon has been very, very clear and said that Bezos, I know internally has put out the edict that, look, 80% of the U.S. population lives within 20 minutes of a Walmart. If I want to take more market share from them, we need to be an hour delivery.
Right.
You need to be able to get in the car, drive 20 minutes to Walmart, pick out your product for 20 minutes, get back in your car, drive home. So that's an hour. We need to be able to beat that in order to take market share away from them. And Walmart sees that as a threat and sees FedEx as a partner in helping address that threat.
What about UPS? Are they doing the right thing by sticking with Amazon?
I don't think UPS really has a choice. You have a little bit higher cost structure there per package delivered. And let's face it, their service is a little less flexible, and so is their infrastructure with the unionized workforce. You just don't have the same flexibility to deal with it, part of it. And then also there's other completely different parts of the market that are being ignored, but addressed by those like XPO with last mile delivery. So somebody comes in and helps you with your the big screen TV or the refrigerator that you bought online.